Alright, how's it going, guys? So today we'll be going over kind of like the basics to cryptocurrency trading and some strategies that I follow that I profit from the most. Firstly, we'll be going over trend lines, which is some of the most basic strategies one can follow and provide some solid minimal risk returns if executed properly. So for instance, just quickly looking at BTC, look at this freaking move, man. This is crazy. Absolute nuts move. 40% move straight up to $11,500. Now we're looking back at a retrace. Yeah, this is going pretty mental at the moment. All right, so let's jump into some trend lines. So first off, a trend line represents, if you're using TradingView, this button over here. A trend line represents the movement of the market, the overall trend the market's in, and trend lines. So trend lines can be drawn from various degrees, distances, any kind of stuff to get information on what the market's doing, where it's going, what it's heading, that kind of stuff. So, for instance, if you draw a trend line on the weekly chart, it's going to look pretty parabolic, but the further you draw the trend line, the more significant it is. So for short-term traders, swing traders, whatnot, you'll be drawing trends on the 30-minute, the 15-minute, the 1 hour, around this area, right? And then this will give you a short-term idea of what the market's doing. Long-term, we'll be looking at 4 hours, 1 day, 1 week, 1 month. Now this is Bitcoin on Bitfinex. The monthly is obviously extremely hard to draw a trend line on, so we'll be avoiding that. Same with the weekly. The daily provides great information for medium to long-term investors. I'm just hiding the volume here so we can get a better look at the chart. So first off, when trading with trend lines, you know, you want to trade. For instance, if you're trading, if you're going long on a position, you want to trade with the market, obviously. So, for instance, if we forget about, let's forget about everything past this point here. Make that a bit darker, a bit thicker. There we go. Let's forget everything past this point. So we're just worried about this little trend that's going on right here. So for instance, if I was trading this trend line, I'd first off look, well, let's get rid of that. So I'd be looking at where we pulled back to, what immediate trend we're in. So again, we're on the daily here. So this is for short-term to long-term traders. I'd first be looking at this point here, and I'd be drawing it up. This trend line is white, so let's change that to black. Now, you can draw trend lines various ways, and many people draw them differently. This is kind of a personal preference sort of thing. I often draw from the bottom of the wick and touch as many wicks as possible on the way up. This is a less risky option because the chance of it hitting these wicks in the future is quite low. So once it does cross with a full candle, for instance here, you can be sure that it is a trend reversal. Some people trade bodies. This again, so you'd be hitting these bodies here. This again is a little more risky, but also the possibility of pulling out quicker upon a trend reversal gives more gains. So this can be drawn from either way. I personally draw from the wicks because I'm more of a conservative trader. So for instance, I'd be drawing, let's say we're around this area here. I'd be drawing, so we've got a massive wick up. This is where you don't FOMO, you don't buy in here. This technically would almost be an all-time high. This would be an all-time high here, and this would be pushing up resistance along this all-time high. Therefore, you wouldn't be buying here. Okay, you'd be watching it, you'd be looking for re-entry area. Now, I'd be drawing a trend from bottom of wicks, so I'd hit this wick, hit this wick, hit this wick, and continue upward. Now keep in mind, we're not really paying attention to anything here. We're pretending like this hasn't happened. So we've got this massive uptrend, which in today's terms is not that big. It's from 1,000 to, I mean, it is a big move. Anyway, we'd be looking at, if we're watching this spike here, we'd be looking at re-entries, right? So we draw this trend line. We can see visually we've hit this trend. We've hit this very solidly. We've touched here, and we've touched. We haven't touched anywhere else. So that's a two touch trend. All right. It could be considered multiple touches here because it's touched twice. So I would say this is a fairly strong trend line. All right. So once we've spiked up, now we're looking for re-entries, right? We've come down. We haven't touched the trend line yet, so we're still not looking for entries. We're still not looking for entries. We've touched the trend line. All right. So now when you're trading in an upward market, or in a bullish market, sorry, you're looking for entries as soon as something touches the trend line, right? So for instance, in this scenario, we've spiked up. We're not looking for entries because we're almost at an all-time high, right? We're ignoring this. We're coming back down. Hasn't touched, so we haven't bought in yet. We're watching it. It's touched. All right. So now here it's touched 1, 2, 3 times. Right now in this scenario, you'd be watching it here. You wouldn't immediately buy as soon as it touches. You could, but that would be kind of risky, because it's got the possibility of breaking this trend right here and shooting back down. All right. So you want a confirmation. So we can see it's touched here on this wick. Well, the trend line has formed through this wick, and we can see from the next candle we've engulfed this candle here. Therefore, you pay attention. One more candle engulfs this next candle, and we're continuing along the trend line. This is where I'd be looking to buy right here. This candle right here, because it's engulfed the previous candle, which has engulfed the previous candle, and is following this trend line. I'd be looking to buy right here, which is along this resistance here. As soon as it breaks this resistance, we're off. All right, you gotta watch this resistance though. Notice how as soon as it breaks the resistance, it runs. So you'd have to watch this resistance closely here to see if it breaks. Now, if it doesn't break, you'd have to watch it, and you'd have to watch it against this trend line here. Now, if it were to break this trend line, for instance, if it didn't break this resistance and pushed over here to another candle, which stuck at this trend line here, you'd be looking for this, right? So we've got a possibility of a retrace if it can hold this trend. So this is something to pay attention to. Again, you've got to watch the signals. You got to be watching the buy volume, right, which we've got muted here. And as you can see, 3 buy candles and a big buy wick there. This is a good time to buy between these. All right, now you got to watch it closely. Again, breaks the trend, then you want to get out. If it breaks this resistance, you want to get in. These are factors you need to be looking at. So for instance, it's following this trend nicely, 3 wicks along the trend. This is nice, all of them engulfing the previous. And so it comes up to this resistance, and it's got enough buying volume here to push through it. Right, so now we've got ourselves a nice little run. So if we've bought here, let's say for the sake of an argument, we'll buy at the top of this one, worst case scenario. Let's buy at the top here, and we've shot up. That's a 14% gain right there through one day. That's one day. So we're on the 1 day chart. So that's a 15% gain in a day. From a simple chart, simple technical analysis, I've drawn, not including this line, I've drawn 2 lines, and using a bit of technical analysis knowledge with trend lines and resistance, I can see that visually we can, if we've got a breakout, it's an easy 15%. Right, so that's one way to trade trend lines. Let's delete these lines, and let's look at some other ways to trade trend lines. Now, for instance, let's look at this. So we've drawn a trend line here, right? Taking into account the previous example, we've drawn this trend line, and we've profited 15%. We're not buying in these regions because these are all-time highs. Right? We're not tracing the trend. Let's say we're a conservative trader. We've made our 15%. We're not looking to trade here. These are all-time highs. Right? We've got a bit of market confusion here. We're not sure what it's doing. We're waiting a couple days. Right? We can see it comes back down, and initially, if we were watching this closely, we'd have buy orders set along this line. Right? And one of our orders might have, let's get rid of this. One of our orders might have filled here if we were close to this line or a little bit off of it. As you can see, this wicks down right here. So we could have been able to get an entry here. If we did get an entry here, let's say here, we would have wrote it up. We could have made another 36% gain within 10 days, a week and a half, and you've made 36%. Right, so that's if you're a short to mid-term trader, you want to be watching this trend line, and you want to be looking for entries along this trend line. Now, as you can see, this is a massive wick down, right? So this would have been it never did cross the trend line though. Therefore, we'd be looking for re-entries here. Now, if it did cross the trend line, we'd be looking to pull profits. So let me explain to you what you do if we cross the trend line. All right, so for instance, we've got a nice uptrend, hits here, right? So we've got a 2.2 plus a bit trend line. So pretty solid. It looks like it's riding it pretty well. We get up to here, right, where we've got a decrease, and we actually hit the trend line. Now, as you can see, once we hit the trend line, we get a green candle. Right, so the trend line's trying to push this up. It successfully does push it up. It remains here, and now we've got a spinning top forming here, which shows market confusion. And as you can see, the spinning top is then followed by a red candle, which shows an imminent downtrend forming. Right, so we'd be looking to exit here along this downtrend, and sure enough, next candle closes below the downtrend. So if we were conservative and if we were trading this downtrend, for instance, let's say in that scenario, all-time high, we don't want to buy here, we want to buy here. If we were trading this trend line, we wouldn't be entering here. Remember, that's an all-time high. We'd be waiting for entries along the trend line. So we'd be looking at an entry here. We'd be trading it, doesn't cross the trend line. We're still not exiting, doesn't cross the trend line. It gets close, but we're still not exiting. Trading, still holding, hasn't crossed the trend line. It crosses the trend line here. We want the next candle for confirmation, and the next candle closes below the trend line. Therefore, we'd be looking to exit. So let's say we sell at the average candle. Right there, we've made 52% in 36 days. If you had $1,000 in this trade, you would have made $500 in 36 days. Right now, obviously, that doesn't sound like great return. But then again, you can scale it towards how much money you feel safe throwing into the crypto market. So for instance, if you had $10,000, you would have made $5,000 over that month if you had $10,000 in this trade. And again, respectively, if you had $100 in this trade, you would have made $50 throughout this whole trade by literally doing absolutely nothing except holding it, checking it, because we're on the daily. All you need to do is check it, because this is a mid to long term trade. This is especially looking at the daily chart. All you need to do, look at it once or twice a day, and make sure it's still following this trend line. And if it's not, if it breaks the trend line, then the next day you look for a candle, right? And if the candle closes, so you'd see this and you'd go, okay, let me see what the candle's like tomorrow. You wake up tomorrow, you check it out, and it's below, and the whole candle is below the trend line. Then you get out. Okay, that's still a 52% gain in 36 days. That is great gains right there, guys. Now, this is how I would trade as a conservative trader. Now, if you were to look at a little bit more risky, and you trade from the bodies, right? We'd still be looking at an entry around here, which is an entry around the same point as we did earlier. Again, you have to be a little bit more experienced to trade these, because here I would be looking to exit because we've got two below the trend. Now it does keep following it up. And this would close me out right here. If I was in this trade and I saw a wick spike down that much, I'd be looking to exit. Then again, that's why I kind of trade off wicks. But if you're trading off bodies, see, you could have made a higher profit here. So let's say we entered here and sold at the top. Once this crossed, we would have made an 80% profit instead of a 50% profit. Now this depends on the type of trader you are, your expertise level, and everything like that. I'd start off, if I was talking to my younger self, I'd start off with trading wicks, right? Because it's simpler, it's easier to see, it's less risky. Sure, your returns may not be as high, but it's an easy way. It's an easy strategy to get into technical analysis trading. Now, so that's how you trade an uptrend, and that's how you exit an uptrend. Now let's look how you get back. Now let's look at how you time a downtrend. All right. So for instance, as soon as you cross a trend, right, this previous trend basically becomes invalid. So now we'd be looking at entries, right? We've got out. We've made our 50% in 36 days. Now we're looking for re-entry. So now we take a trend line again and draw from the tops of the wicks and touch as many tops downwards as we can. So trending up, you touch the bottom of the wicks and touch as many bottom wicks as you can, and trending down, you touch as many as top wicks as you can. So for instance, we'd start here at the very top wick, and we draw it on our way down, touch these wicks, and you draw it down such as that. Right now, we're looking. Remember, we've got out of our trade here. Right now, we're looking for re-entry. All right, so we're watching it down. We're still in a downtrend, right? Ignoring this uptrend, we're now in a downtrend, right? So you want to enter once this trend is reversed. Okay, same sort of entry except in reverse as this trend here. So we're looking, as soon as one wick crosses, we're looking for confirmation in the next wick, and then we'd buy in on that next wick if it is confirmed, and then you ride that trend up just like you would this trend. So we'd be watching it here. Obviously, here is where we'd pay attention, right? It comes close to breaking this trend, and it doesn't. So we wouldn't be looking for buy orders yet. We wouldn't be looking to buy yet. Still no. Still no. Still no. Because the thing with downtrends is you don't know when they're going to end. You can predict using the Fibonacci retracement and supports where they're going to end. Those are for future videos. We'll go over that in future videos. But they are extremely helpful tools, and I'll show you guys how to use them. For now, we're just looking at trend line, which is fairly basic. So again, we don't know when the downtrend is going to end. Therefore, we're only looking for entries when the trend is broken. Right? This is an extremely safe way and risk minimal way of trading. One of the easiest ways to start out trading. One of the ways I started out trading, and it's a great way to build up an account safely. So again, we're not looking to buy. We're not looking to buy. We're close. We're watching it, but the next candle doesn't show to buy. Again, doesn't show to buy. Doesn't show to buy. Now we've broken it. All right, now we're really looking. Okay, because if the next candle holds above the trend line, now we're looking to buy. And sure enough, the next candle does hold above the trend line. So we'd be looking to buy around here. And look at this. Now we're in a position, right? It's void. So we've voided this downtrend now because we've crossed it. So it becomes void, and now we're back in an uptrend. So same thing again. You want to draw a trend line from the bottom. Hit as many bottoms as you can, like at wicks. So we'd be hitting wicks, and that would be our trend line around there. Now again, hindsight is 2020, so analyzing real time is a little more difficult. I will show you guys on a different example, a real time, a trend line analysis, and I'll show you guys some picks and whatnot. So, first of all, remember we bought here. Okay, so now we're in an uptrend. Now we draw back down here at the bottom, and all the way, and touch as many tops as you can. So the key with drawing trend lines is you want to draw from the bottom of the most recent dip to the top, or until it crosses, basically. And you want to touch all the bottoms again, and then the opposite for a downtrend. So you want to start at the highest point, highest wick. And touch as many tops as you can all the way down until it crosses. Okay, so we'd be starting down here, which, for instance, we bought back here, right? But we're not drawing the trend line from where we bought. We're drawing the trend line from the most recent, the most recent bottom. Okay, and this depends again on your time scale, because you can buy. For instance, if we were on a 4-hour, you could buy closer. If you were on a 1-hour, you could buy closer. But then again, those trades aren't going to last as long. So I'll explain that in later detail. But for now, we'll just focus on the 1 day, like the mid to long-term trades. So we've bought here, remember. So we're drawing from we're in an uptrend, and we're drawing from the most recent dip and touching as many bottoms as we can. So we're here. We bought here, and we're riding. Okay, so we're riding this trend line. It gets close here. We're paying attention. All right, we're paying lots of attention here, because if it breaks here, we got to get out. Okay, and we want to get out as fast as we can, so we can secure secure the game before it switches into a downtrend. So we're watching every single day, watching it closely, and it turns out it bounces off this trend. All right, so now we're continuing up. We still haven't sold, remember, because we're holding it until it crosses the trend. We still haven't sold. We're again watching it closely when it gets close to the trend. Still haven't sold, still haven't sold, still haven't sold. It crosses here. Now we're paying attention. Now we're getting ready to sell. And then the next candle is completely below the trend line, so now we're getting out. Let's say we get out in the middle. That's again a 57% gain in 47 days. Guys, if you can make 57% in 12 months, that's a little over 600% a year. That's crazy returns. All right, so now we're looking at so again, now we're looking at getting out. Right, so we've got out here. Now again we've crossed this up. We've crossed this this bullish trend. Now we're in a bearish trend, and so now again we repeat the same process. Draw from the top, hit the tops, hit the tops, hit the tops, because we're looking for re-entries. Okay, so now this is getting this is getting a little close because this downtrend is quite short. But anyway, we're still looking for entries. So down, we're paying attention, because this is along this whole line, this entire 4 days, right? So every day we're looking for entries, but it hasn't crossed it yet. Now we cross it here. We're still crossing, and we've got a breakout above it. All right, so we'd be looking to buy here. So again, now you repeat the same process. Now we're back in. All right, so now we bought here. Then this trend, we'll delete this, make it a little easier to see. So we've bought. We've bought as soon as it crossed the downtrend. So we bought around here. Right, now again, we do the same process. Draw from the most recent bottom, and we draw up and hit as many as we can. Now we're getting close to current times, right? So currently, we bought here. Once the next candle confirmed it was a cross in the trend, we bought here, right? So now we bought, we haven't sold. Now we're paying attention, remember, because it's close to the trend line. We want to sell if it crosses. It doesn't cross though, so we continue to hold, and now we're up currently, right? And we'd still be in this trade because we haven't crossed the trend line. So currently, no matter what it does, look at this swing. Look at this. This is a 14% increase in a day. Probably less, because these are daily candles. Oh yeah, well, it is less. It's got all the way down to an 18% swing in a day. Okay, so you have to ignore these swings. These are massive swings, from $11,500 to $9,500. Right, that's a $2,000 swing, right, in one day, and you have to ignore these. It takes a lot of perseverance and patience when trading these trends, because you see a $2,000 dip and you start freaking out, right? But we haven't crossed the trend line, so we're still holding in this trade. Remember, we bought down here once it crossed this trend line, and we're still holding this. So we're up 60% in half a month. 60% in half a month. That's crazy gains, guys. Right, now feel free to take profit throughout this increase. If you got close here and you get a little scared in case it does break, take profits here. Look at that. That's a 30% increase in 10 days. 11 days. That's a crazy increase, guys. That is absolutely insane. Right? So you're not losing money by taking profits, okay? No one's ever losing money when they take profits. All right. So again, we're still in this trade. This is current, right? This is currently the price. So if I were trading this, which I'm always in Bitcoin, but if I were trading this trend line, which unfortunately I'm not, but if I were, I'd still be in it. All right, because we haven't got confirmation of a trend breakout or a trend reversal. All right, so look at that. We're up 60% in 16 days. This is one of the most risk-free and easiest ways to begin technical analysis trading. And it takes a very basic understanding of drawing trends, seeing where the market's going, timing the market correctly, and it doesn't take a lot of staring in front of screens all day. You check it a couple times a day, but when you wake up, when you go to bed, on your lunch break, anything like that, and all you need to do is check if it's above the trend. If it's above the trend, you close the chart, you're done. Right? You check it again, it takes 5 minutes. 15 minutes out of your whole day. 5 minutes 3 times a day. 15 minutes out of every day. That's all it takes to do this. And you can and you can gain, and like I said, 60% in 16 days. By 15 minutes a day. That's absolutely nothing, guys. That's so easy to do. I highly recommend people start out technical analysis trading through this. This is one of the easiest ways, one of the most risk-free ways of trading, and that's about it when it comes to trend lines. If you guys have any questions, please feel free to comment. I'm going to try to get back to everyone. And yeah, if you have any other further questions, anything like that, I'll be releasing a couple more videos throughout the next week or two, going over various other trading strategies, such as using Fibonacci retracements, using support and resistance, and all kinds of good stuff like that. So feel free to subscribe and like this video, and I'll be posting more content in the future. Thanks, guys, for watching.